Alrighty. All right. Welcome everyone. Welcome to Thursday's live stream. Whoa! 5 likes. Thank you guys. Awesome. All right, so let's begin right away. I have some pretty important things to say. So, first of all, let's begin with the market. So, as written in the description box below, we're going to talk about SPY, QQQ, IWM, and then we'll finish it off tonight with the two previous swing trade ideas that I gave everyone on Tuesday's live, which were EOG and SU. Okay, so so for the S&P 500, this week is clearly giving us the importance of knowing the fact that we shouldn't be going too heavy during earnings season, right? Because we get very wild and sharp moves to the upside and to the downside, like we saw today when we opened up with a massive gap down. And if you guys aren't following me on Instagram, make sure you guys do that. But on my Instagram story, I posted that very successful swing trade for SPY to the downside using put contracts, and it turned out great, right? Now, that obviously worked in our favor really well, thanks to Meta's earnings, as Meta platforms absolutely crushed their earnings report, but the reaction was very negative. So that really just pushed the markets lower. But then after hours today, we both got Microsoft and Google crushing their earnings report and also having a very positive reaction to their earnings report. So again, you really never know how these stocks will react to their own earnings report, their own quarterly earnings report. And even if the numbers may be positive, even just the overall guidance and outlook might be positive, the reaction can actually be negative, right? So you don't really know what can happen. It's a very, very huge coin flip, a 50-50 probability if you're trying to gamble through earnings. So with that being said, the S&P 500, the markets after hours, I believe closed over $507.50. So that's a pretty big move from the close here, largely due to, because again, Google and Microsoft's earnings. But here's the thing, right? Obviously we shouldn't be sizing, really bigly into positions during weeks like this, but rather, trying to stay away from putting on too many trades, or at the minimum managing positions that you've already taken before earnings week started, and obviously cutting back on that position so that you're not risking too much during this wild week. So with that being said as well, these types of price action and moves tend to be kind of a blessing in disguise, right? For example, today the market gapped down, but the gap down was so hard, right? The market whiplashed so hard to the downside that it just wanted to move up. And that's exactly what it did ever since it opened, right, today. At market open, we just relentlessly continued to move sideways until we continued to move up higher and higher and higher, and ultimately we ended up closing at highs. And after hours, we got another whipsaw movement. It's very, very, very quick, right? Move to the upside thanks to Microsoft and Google's earnings. And I think that will provide us with another opportunity tomorrow morning, where we whipsawed so radically, I would say, to the upside, that it just makes the market makers want to push the price lower, just like today from the opposite point of view, where we whipsawed right back to the downside until in the morning at market open we continued to decide to move up right until close. So this tells me that obviously, again, we shouldn't be leveraging too much into any of our positions, our swing trades, our day trades, whatever it may be, all right? And we need to continue to understand that this is a risk-off environment. So from a general, I guess more of a summary from what I'm trying to say here is that this earnings season as it reaches its peak next week and into FOMC as well, you guys need to understand that this is a time to be risk off, okay? Because again, we aren't fully out of the woods yet, right? We have a lot of macroeconomic issues that are currently just making the markets bogged down with sellers. And don't be too convinced of whatever whipsaw movement that we get, upside or to the downside, because sometimes at the end of the day, it might just be consolidation, simple consolidation. And for me, that's what it is right now. It's simple consolidation before we decide to head on lower into the month of May. So tomorrow, if we do open up around 507.50, that's going to be the previous pivot high point from yesterday at 507.37. And if you do make a higher high, there is most likely going to be a rejection. and the reason why, well, because again, we've got this very rapid whipsaw price action at close during after hours. And if that holds, we should be getting a nice rejection and a drive lower at market open. Now, if I go to the S&P 500 futures, right? It seems like we're already trying to move slightly lower and kind of consolidate this very large move up and open for futures. And I really wouldn't be surprised if we do decide to come back down again and stay within today's Thursday's candlestick here, within the range of this S&P 500 futures candlestick. So at the minimum for the futures, I would want to see yet again another retest of this daily 10 SMA. And so far, this whipsaw action again could simply be consolidation. And what is this consolidation for? Just to allow my daily 21 SMA to catch up. And again, we are in a downtrend. We just started the downtrend. All right, I will be pretty surprised if the market just completely forget about this downtrend that we made and just completely V-shaped recover to the upside. I mean that's going to be the most surprising thing, because we have a lot of weight overhead, right? Not just from the supply that we have now, because of this nice move down that we saw for 6 consecutive days, as I've explained in the past, especially on Tuesday, but the fact that we have a lot of heavy overhead weight from the macroeconomic issues and risks that are involved with the current market conditions. So, all of these things come into play, right? All of these different factors come together, amalgamate together, and give us that one directional move, net directional move. And currently, I am still leaning towards the bearish side. And so, again, all of this is just simple consolidation as we are allowing the daily 21 SMA to catch up. And so, if you go back on SPY here on the S&P 500, if you do again move up all the way up to 507.50 or even hit 508 during pre-market hours, there is a chance that we can revisit this 509.80, or again, if you just want to round up, 510 level of current resistance. Again, this is a heavy level of resistance now. Why? Because that's exactly where we broke to the downside, and at the same time, we were converging with this level. We were converging this level with the daily 50 SMA. Okay, so this dark blue line is my daily 50. Hey Joe, what's up? What's up? And welcome to a lot of new people here. I believe we've been getting more subscribers as well on the channel. So welcome, guys. Welcome. If you guys are new, make sure you guys hit that thumbs up down below if you guys are enjoying this information that I'm giving you guys. So, and again, thank you guys so much for 5 likes already. That's amazing. I believe I have 4 or 5 likes before I even started the live stream. So thank you guys so much. That really means a lot to me, guys. So, hey, welcome, guys. Welcome. So, what was I saying here? So this 510 or 519.80 level of resistance, current resistance, but previously it was a level of support, is critical. Right, because if the bulls really want to run this back up, which will be very surprising, as I've said a couple minutes ago, we need to break over 510 or 509.80, and then we can start squeezing right back to the highs. But I'm very skeptical of that because, again, when we broke below 510, we also converged at this daily 50 SMA, which we have not retested since we reclaimed it back in early November, right? So the fact that we've lost it for a couple of weeks now, for about 2 weeks, tells me a lot, right? The longer term short sellers are here. They are present. It's just that we have this volatile earnings week that we have to face, and we need to be really just vigilant on this any type of whipsaw action that we get from the markets due to earnings. And again, remember that the market is solely moving, especially last night, right, when we had a nice massive gap down, was from earnings. And today after hours, the price action was also due to earnings reports, not from the overall macroeconomic conditions, which I think will prevail, and we can still see more of a larger move to the downside in the mid to long term. So even if we do shoot up to 510 or even over 510, there is still that possibility of us hitting this daily 50 SMA and also rejecting at this daily 21 SMA. So we have two SMA areas that will be treated as resistances, the daily 50 and the daily 21 SMA. So you guys have to be careful when you guys are looking for a potential reversal back to the upside, because again, I wouldn't know, but there's still that possibility. I gotta think of these two different scenarios where we can see potentially a V-shaped recovery back to all-time highs. Right? I mean, this is still a possibility. It's just that from a macroeconomic and just an overall fundamental perspective, I just find that skeptical. Right? I just find that skeptical for a potential V-shaped recovery back to the upside. If that happens, hey, it happens. All right, I'm wrong. But again, I just need to know that scenario is possible for the near-term future. Does that make sense, guys? That makes sense? Give me a thumbs up down below. Or you guys can just put it in the chat as well. So tomorrow, if we do decide to fill in the gap, right? Because again, we basically filled in about, what I would say, 75% of the gap today, based on today's price action and due to today's price action. But thanks to the after hours price action, we're able to fill in the gap 100% of the area of that gap down, and then much more, right? Since we saw the price closing around 507.50 or slightly over 507.50. So if we do decide to, again, just hold those, hold this area specifically, 507.50 or just 508 if you guys want to round up, there is a chance that we can come back down and fill in that gap up. There is that slight opportunity and chance for you to go short again. So that is the major thing that I personally will be looking at. I don't know about you guys, if you guys want to be long, long this market. But for me, I am still very much bearish. All right. Okay, now QQQ. So QQQ is up, I believe, 431 if I'm not mistaken, after hours here. So let me make sure I got that one right. Yeah, so actually, so QQQ a little bit muted compared to the S&P 500. So QQQ closed at 429.07, and that's still within the area of resistance that I gave you guys a couple days ago, right? So 429 to 430. So I also wouldn't be surprised if we do see a rejection at market open, and then we get a really big drive lower to the downside. So that's something that you guys should be considering as well, if you guys are wanting to play any type of NASDAQ shorts. Okay, so if we do see that drive lower, we should be seeing at the minimum a retest of the daily 10 SMA, which should start to actually curl and sort of flatline around 426. So that could be your initial price target tomorrow if you guys are wanting to day trade a potential move to the downside for a quick gap fill. All right, and I believe I didn't give you guys that target for SPY. So for SPY, if you do see that gap up and then that gap fill and that subsequent gap fill, your first area for a target price is 505. And you guys have to remember there is an area of of supply at 503 to 505, but tomorrow at open, that will become a new area of demand. And again, this can constantly switch as we're seeing this rapid whipsaw action to the upside and to the downside. And again, you guys should have a little bit more of a risk-off mentality compared to a risk-on mentality during these times. Okay, and again, earnings season will top out next week, right? When we have Amazon and Apple earnings. Those are the most pivotal earnings reactions that the market will be waiting for, and also FOMC as well. So we have a lot on our hands, basically. Okay, now last but not least, let's take a look at IWM. So I actually got short IWM, and if you guys have watched my Hump Day market recap video, it's a new series that I'm doing for Wednesday. If you guys watched that, I gave you guys a pretty good in-depth reason why I am looking to short IWM into the month of May, and most likely into most of quarter two. So I think it's going to be pretty interesting to see how this one plays out. I'm currently slightly underwater on this one, on this position, but no worries, it's a starter position. I only have one contract because I knew that there's that possibility of the overall markets filling in their gaps or their gap down areas today. So again, also my mentality is a risk-off mentality. So if I want to keep my toes in the water, I need to make sure that if I'm going to play something, I need to be very careful with the amount of risk that I'm going in for each single position. So one contract for now is a starter position, and I will definitely add one or two more depending on how IWM reacts in the next couple of days, and especially into the end of the month, right? Especially for FOMC. So make sure you guys watch that recent video that I sent out and I uploaded last night. Okay, I'll give you guys a link in the chat room here. Okay, so make sure you guys watch this video. It's very, very important, very important and valuable information, and very applicable information as well. Okay, so there's that link. So IWM, I will be looking to add if we do decide to go all the way up into 198, but IWM basically had no reaction, and in fact, it's actually moving to the downside in after hours, and it barely moved, right? If you go take a look at the Russell 2000 futures, yeah, so it's currently down about negative 4.5 points. It's sticking close by to this daily 10 SMA, and I really wouldn't be surprised if this is our official lower high point here, our lower high pivot point. Okay, and then we make another lower low compared to this current low here, right? So basically what I'm envisioning, guys, let me just give you guys what I'm, right? So something like this, right? So this is just a, again, it's just a scribble, nothing to really worry about here. If I'm not thinking that this is exactly going to go exactly like this, right? I don't think the market is going to follow what I've just drawn here, but that's something that I'm envisioning for the future price action for the Russell 2000 or IWM, right? So yeah, I mean, that's pretty much it for IWM. Again, watch that video from yesterday. It's a very important video. I give you guys a lot of good reasons as to the reason why I want to be short the Russell 2000 into the end of quarter two. So make sure you guys watch that, and even into early quarter three as well. Forgot to mention that. Okay, so that is it for the markets. Let's take a look at our current swing trades that I've given everyone on Tuesday's live stream. Okay, EOG. All right, so EOG was pretty interesting today because it had a pretty big move lower, and we saw an increase in volume. Actually, I forgot to mention this as well. We got an increase in volume compared to yesterday's volume, which kind of surprised me. But overall, the amount of volume didn't really change much of the price action across the markets. In fact, we've only seen the actual reaction to that increase in volume after hours, thanks to the earnings reports from Microsoft and Google, which are heavyweight tickers, right? So for EOG, this one was particularly interesting because we hit this 136.35 resistance nearly to a T. The high of today was 136.32, so only 3 cents away from this 136.35. So I'm currently in this one. I mean, this one is basically almost break even at this point at the close. But, and again, because the premiums haven't moved too much. And again, they will move once we start to move back up higher, and once we can get back to that all-time highs area of 148. Okay, so apologies guys, my voice is cracking because my throat is pretty dry. So yeah, so for EOG, continue to watch out for this one. I don't know where this one can go, but there is a possibility of us making a nice bull flag or a nice pennant here. So watch out for that, right? And actually, I would prefer this to happen, okay, for this stock, because it'll provide us with a lot more of a launch pad moment where we can see the price moving sideways before it can break to the upside. And again, this one has earnings on May 2nd, so that's something that you guys should also consider. Okay, but overall, I mean, this one's still acting pretty nicely. I'm not too worried about earnings. I mean, VLO had earnings today and it barely moved. All right, so so VLO barely moved and it's still in that nice consolidation price action so far and price trend. I would expect it to find more support on the daily 50, but again, this one's just I will be looking for an entry point soon again for VLO, but I am a bit more interested on EOG. Okay, right now, last but not least, we have SU. So SU also has earnings around May 6th. Okay, I don't think they've officially announced the earnings report date, but SU had actually popped over its 39.35 resistance level on the daily time frame. So this one again, let me just remind you guys. All right, SU has a huge macro base that dates all the way back to 2008. This is huge, right? I mean, this is like 16 years worth of consolidation, right? I mean, so nearly 2 decades worth, right? Over a decade's worth of consolidation, and this company has not seen any progression of its share price after its peak in 2008 and then right before the GFC, right, the Great Financial Crash. So you know, I feel like this one is due. It's been overdue for a potential large breakout over this massive macro resistance level at $42. So again, my initial goal is for this one to reach 42. I don't know, maybe next month might be the time that it's able to reach 42 again for, I believe, the 1, 2, 3, 4, 5, 6, 7th time, or actually the 8th time if we do get to 42. So I mean, that's a lot of retests at this level, and so I would hope, well, I am hoping that we will break over 42 so that we can at least head back into the previous highs that we saw in late 2007 and early 2008. Okay, so who knows, maybe earnings might help this one propel to that 42 resistance level or whatnot. But again, these two are the two energy stocks, or two oil related names that I really want to be looking into. EOG is specifically a oil refinery, so make sure you guys take a look at that. But yeah, I've also given my members 2 different specific gas related names, natural gas and just overall gas related names, and I'm currently in one right now. And if you guys want to know what that is, make sure you guys join us. I am doing a special promotion of 50% off for 30 days. Okay, so make sure you guys hit me up on Instagram to receive that discount code of 50% off for 30 days. All right, especially if you guys want to know what I am swing trading for those, well, out of those 2 specific gas related names. Okay, so that is it for tonight, guys. I mean, overall, just, you know, make sure you guys are watching out, all right? Watching out for the overall markets. Again, we're going to be getting very quick whipsaw action, and you do not want to be caught up in that overnight, especially like we saw today at pre-market, and even just last night, and also tonight, where we've seen the market just absolutely rocketing higher. But again, I'm not in any of my any of the indices like the S&P and the Nasdaq, the popular indices. I'm only in IWM, right? IWM, or the Russell 2000 short. And I will be adding to that short position for the Russell 2000 or the small caps if we do see a nice pullback tomorrow for a nice gap fill from the overall markets like the S&P or the Nasdaq. All right, so that is it, guys. Make sure you guys remember the levels that I'm giving you guys, especially on the S&P 500 and Nasdaq. And if you guys are following me on the Russell 2000, good luck. Make sure you guys know your outs. I know my out. Again, I only have one contract. It's a risk-off environment. You do not want to be increasing your risks on each single position that you guys get, whatever it may be, because again, it's a risk-off environment, right? We are not in an uptrend yet. And the market bottom is not there yet, right? Based on everything that I've seen so far, especially the bond markets, right? Especially the bond markets and the bond yields. All right, the bond yield was up today again. So, the risks are piling up as we head into the middle of Q2 and into the FOMC meeting. So, that's all I can tell you guys. Okay, so be careful out there. Make sure you guys have my levels that I've shown you guys tonight on your own time frames and charts for the S&P, Nasdaq, or IWM, or all three of them. Okay? All right, guys, have a great rest of your night. I'll see you guys next week on Tuesday at 8:15 p.m. Pacific Standard Time or 11:15 p.m. Eastern Standard Time. Good luck and have a great rest of your night. Thank you so much for watching.